What if you could trade with confidence and reach your financial goals by 2025? Imagine waking up every morning, knowing you've got a solid plan to grow your money and hit your targets. Imagine the peace of mind that comes from being in control of your financial future. How would that feel? In this video, I will share with you 7 simple steps to become a profitable trader by 2025, even if you've never traded before. By the end of this video, you'll know exactly what to do to start making smarter trades, reduce risk, and build your profits in a way that's safe and steady. So if you're ready to take control of your financial future, hit that subscribe button because we're about to dive in and make trading a path to success. Step 1. Set clear goals. Trading without goals is like setting out on a trip without a map. You wouldn't know where you're going or how to get there. Setting clear goals helps you stay focused, motivated, and aligned with what you want to achieve. What's your goal as a trader? Think about it carefully. Do you want to make extra money for family expenses, save for something special like a vacation or a new car, or maybe even aim to turn trading into a full-time income? The key here is to make your goals as specific as possible. Instead of saying, I want to make money trading, try saying something like, I want to grow my trading account by 10% over the next 6 months. This way you have a measurable target to work toward and you'll know exactly when you've achieved it. Why is this so important? Focus. Goals give you a target, helping you stay motivated and focused on what matters. Progress tracking. Clear goals let you see how far you've come and celebrate small wins, which keeps you motivated. Motivation. When you set goals, they remind you to keep learning, improving, and pushing forward. Start with small goals to gain confidence and build up to bigger ones as you grow. This will keep you motivated and excited throughout your trading journey. Step 2. Choose the right trading platform. Think of your trading platform as your toolkit. It's where you'll spend all your time, so it's essential to pick one that fits your needs. Choosing the right platform is like picking the right tools for a job. It can make a huge difference in how smooth and efficient your trading experience is. If you're just starting, look for platforms that are easy to use and offer lots of support, like eToro and TradingView. These platforms have beginner-friendly features and tutorials that guide you step by step. A few things to keep in mind when choosing a platform. Mobile apps. A platform with a good mobile app lets you trade on the go, making it easy to stay connected even when you're not at your desk. Demo account. Look for platforms that offer a demo account where you can practice without risking real money. A demo account is a great way to build skills and confidence. User-friendly interface. You don't want to waste time trying to figure out where things are. The platform should be intuitive and easy to navigate. Support and tutorials. Extra resources like guides, tutorials, and customer support can be a big help, especially when you're just getting started. Additional tools. Automated tools, alerts, and technical analysis features can help you make smarter, faster trading decisions. Take your time exploring different platforms and don't rush the decision. Finding a platform that fits your style and needs can make your trading experience much smoother. Step 3. Develop a trading plan. A trading plan is like a roadmap for your trading journey. Without one, it's easy to make emotional decisions that could hurt your progress. Here's what to include in your plan. Goals. Define what you want to achieve in the next month, 6 months, or even a year. Risk limits. Decide how much you're willing to lose on each trade. Strategy. Define your approach to buying and selling. Will you rely on charts, market news, or specific patterns? Your plan doesn't have to be complicated. Even a simple plan can keep you focused and help prevent risky decisions. The clearer your plan, the more confident you'll feel with each trade. Benefits of having a plan. Structure. You'll always know your next step, so you're less likely to get sidetracked. Emotional control. A plan helps you stay calm when emotions run high. Consistency. Following a plan helps you trade in a steady, consistent way. Think of your plan as a guide that keeps you on track and helps you avoid common mistakes. Step 4. Learn technical analysis. Technical analysis is the art of reading charts and recognizing patterns. Think of it as a puzzle. It helps you predict where prices might go based on past movements. Here's a simple breakdown of what you should know. Trends. Trends indicate whether prices are moving up, down, or sideways. Knowing how to identify trends can help you know when to buy or sell. Support and resistance levels. These are key points on a chart where prices tend to bounce up or down. Learning to spot these levels will help you make smarter choices. Indicators. Tools like moving averages, relative strength index, RSI, and Bollinger Bands provide insights into price trends and potential reversals. Why is technical analysis important? Spot trends. It helps you identify where the market is headed so you can make informed decisions. Data-driven decisions. You'll feel more confident in your trades when they're based on facts, not feelings. Reduced risk. Technical analysis helps you reduce uncertainty and make more strategic trades. Take some time to practice with demo accounts or trading simulators to hone your technical analysis skills. Step 5. Practice risk management. Risk management is about protecting your capital. If you don't manage risk well, you could lose everything in one bad trade. But don't worry, there are simple ways to manage risk effectively. Here are some strategies for managing risk. Risk-reward ratio. For every dollar you risk, aim to make at least $2. This way, even if you lose some trades, you'll still come out ahead over time. Stop-loss orders. A stop-loss automatically sells your stock if the price drops to a certain level, preventing you from losing more than you're comfortable with. Position sizing. Don't put all your money in one trade. Spread it across different trades to reduce your risk exposure. Why is risk management so essential? Protects your capital. Effective risk management allows you to trade longer and withstand losses. Reduces stress. You'll feel more at ease knowing you have a plan to protect your money. Consistency. Good risk management helps you trade steadily without major losses. Risk management is like a seatbelt in your car. You may never need it, but it's there to keep you safe. Step 6. Stay disciplined. Discipline means sticking to your plan, especially when emotions are involved. Trading can be exciting, but it can also be stressful. You might feel fear, greed, or impatience, but staying disciplined will help you make smarter decisions. Tips to stay disciplined. Keep a trade journal. Write down each trade, why you made it, and what you learned. A journal helps you learn from your trades and make better decisions in the future. Control your emotions. Don't chase losses or get overconfident. Follow your plan and stay level-headed. Why is discipline important? Prevents emotional trading. You'll avoid rash decisions that can lead to big losses. Learning from mistakes. Every trade becomes a learning experience. Builds confidence. The more disciplined you are, the more confident you'll feel in your strategy. Discipline is the backbone of successful trading. Stick to your plan and over time you'll see the benefits. Step 7. Continuously learn and grow. Trading is constantly evolving, so it's essential to keep learning. The more knowledge and skills you acquire, the better you'll become at predicting market trends and making smart trades. Here are some ways to keep learning. Read books. Books by successful traders can teach you strategies and insights. Watch YouTube videos. Many channels break down trading strategies into simple steps. Join communities. Being part of a community can provide support, advice, and inspiration. Why continuous learning matters. Staying updated. The market is always changing, so learning helps you keep up with new trends. Improving skills. The more you know, the sharper your strategies become. Exploring new strategies. Learning exposes you to different approaches so you can adapt and grow. Remember, learning is a journey that never ends. Each new skill or insight will make you a better, more resilient trader. Conclusion. Now you've got the roadmap to becoming a profitable trader by 2025. Let's do a quick recap of the 7 steps. Set clear goals. Decide exactly what you want to achieve with trading. Choose the right platform. Find one that fits your needs and trading style. Develop a trading plan. A clear plan will guide each of your moves. Learn technical analysis. Study price trends and patterns to make smart decisions. Practice risk management. Protect your money and keep risk in check. Stay disciplined. Stick to your plan and use each trade as a learning experience. Keep learning. Keep building your skills and staying up to date. Every profitable trader started somewhere, and you're now on your way. With a clear plan and steady practice, you can build the skills to become a confident, profitable trader. If you're excited to take your trading to the next level, check out our next video. Master the most profitable trading strategy as a beginner in 2025. Thank you for watching, and may God bless you on your path to trading success. Happy trading, and remember, patience and consistency are your best friends.